Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always, and this is looking like quite a weekday for the markets. There's just no respite coming through, right? It's still down 200 points for the Nifty right now, over 1% gone, and we've slipped below that 17,400 mark once again as well. A bulk of the pressure today, like we've been telling you, is really coming through from the financials. They've in fact seen losses widen to over 2% right now, and it's around 830 points gone on just the financial index. Of course, on the back of what we saw globally as well. Pretty much all sectoral indices in the red, barring only the FMCG pack today, so that is what is holding up well. But there are perhaps, 7-8 stocks in the green from the Nifty pack that we're seeing. So Ekta, really this entire global-led sell-off is just reflecting here. And no respite, we're also getting into the weekend with an important Q coming up.
Hi, Pavitra. Yes, absolutely. The big important cue is definitely the jobs report from the US markets and how exactly the financials trend in today's trading session as well after what we saw overnight in the US markets. So that would be something that the street would watch quite closely. Well, joining us this afternoon, we have independent market expert Shahina Mukadam and Ruchit Jain of 5paisa.com. Shahina as well as Ruchit, welcome to the show. Well, let's start with asking Ruchit a couple of queries on what we have in terms of queries from viewers. But before we do that, Ruchit, wanted your view in terms of how you would possibly, trade the last hour of trade, considering the important cue from the US, which is the non-farm payrolls data, and going into next week on the possibility that we don't know how financials would react in the US markets either today.
Yeah, hi, very good afternoon, Ekta. Very good afternoon, Pavitra. We have seen that the recent up move, which was there from 17,200 to 17,800, was majorly because of short covering, where FIIs had covered some of their shorts from the index futures segment. When the long short ratio was around 14%, it improved to 25%. But in yesterday's trading session, we again saw some fresh short formations, and this short formations from the FIIs is a cause of worry, which could continue till we see this weakness in the global equity markets. However, if we see our markets levels, then 17,800 has now become a very important resistance. And till that is not crossed, we will not have a higher top, higher bottom structure formation. And on the lower side, 17,200, 17,300 would continue to act as a support zone, as a couple of occasions in the past, in the month of February, we have witnessed a good buying interest there. So we are expecting that the price-wise correction phase may be behind us as far as index is concerned. We would manage to hold that support of 17,200, 300 range, but we may have entered a time-wise corrective phase where some consolidation in this broad range of 17,300, 17,800 would be there for some period of time. So it's, if one has to take a trade on the index front, then certainly at lower levels around 17,250, 17,300, ideally the risk reward ratio would become favorable to take some contra buys. But again, not for a trended up move, but just for a pullback move where sell on rise strategy should also be kept in the next week.
Okay, got that. So that is on, the way the market is likely to trend. But Ruchit, let's also get to the queries which have come in. Vijay Lakshmi has written in to us from Bengaluru. She holds 1,000 shares of Tata Motors, which she bought at 457. So, she is looking at a loss over there. And she also has around 167 shares of Bajaj Finserv at 1437. She says she's a medium-term investor and wants to know whether she should sell at current levels. If we can start with Tata Motors first, take us through your call there. And Bajaj Finserv has been one of the stocks which has suffered quite a blow this year as well, right? Do you think this is something that that could reverse?
I think for Tata Motors, I would recommend to continue to hold on because the way we have seen the prices correcting since the high of November 2021 when it was around 530. The initial price-wise correction got over around 375. And in fact, if you look at some positional charts since last 2 years, whenever the stock is coming around that 375, 400 range, we have witnessed good buying interest over there. So I think the price-wise phase, corrective phase is behind in Tata Motors too. On the higher side, 500 to 480 is the range that she can expect in next 6 to 7 months from 6 months perspective. So around 470, 480 should be the target for Tata Motors. So continue to hold on for those targets in Tata Motors. Bajaj Finserv has been an underperformer of late within the NBFC space. The structure is not much positive over here. On pullback moves, the stock would again face resistance around that 1450, 1430 to 1450 range, where the moving average resistances are there. So for now, can continue to hold for a pullback move, but ideally, if it comes around that 1450, those would be good levels to exit from Bajaj Finserv and rather look from some other NBFC which could show decent outperformance going ahead.
Okay, all right. So that's the view coming in. But let's get in a caller now. We have Nagesh who calls in from Hyderabad. He wants to invest in Adani Ports and GMR Airports infrastructure. Hi, Nagesh.
Hi. Good afternoon.
Afternoon. Tell us.
Yeah, I would be interested in investing in GMR Airports, which has a huge land bank in Hyderabad as well as Delhi, and it also owns Goa Airport. I'm extremely bullish about this GMR Airports and Adani Ports because it has a low P ratio of 25 to 30, whereas Adani other shares has a very high P. Can I invest 10 lakhs each in these two companies?
Oh, okay. And what is your horizon to hold these stocks?
Generally, I'm a long-term investor. I would like to hold them for at least 10 years.
Okay, well, difficult to say what it would look technically on a 10-year perspective. But maybe, Ruchit, if we could get your near-term view on both these counters?
Yes, firstly, even if you are looking for a horizon of 10 years, the way the fundamentals are also changing these days, it's better to take a regular review on such stocks and, even if you are a long-term investor. And as far as technical structures goes, GMR Infra as of now is more in a consolidation phase with a good support around that 34-35 mark. So at current levels, I would say wait for some declines towards that 34-35 in case if it comes in the near future. Ideally, those could be good levels if you want to buy the stocks where the risk reward ratio would become a bit favorable. So for short to medium term, I think some consolidation would be there. But since it's looking for long-term investment, if I look at the weekly or the monthly charts, ideally band dip strategy should be kept, and around 34-35 would be good levels to enter. Now, Adani Ports have been moving, these Adani Group stocks have been moving more on news fronts. So rather than any kind of technical analysis, so I think tracking technicals a bit difficult in such time where news flows impact the prices. But just to give to levels a bit, say 550 to 600 is a good support range for the stock. And in case if we get any declines towards those 550, 600, he can look to enter. But I would advise to keep some stop losses even though it's a long-term investment bet.
All right, got that. I also want to bring Shahina in. Shahina, thanks for joining us. I don't know if you heard the query or not, but our, Nagesh wants to invest in Adani Ports as well as GMR Airports. Do you think these are good bets to make?
I would advise him not either for now. Because if you see, let's see Adani Ports first. I think both of them have given good technical bounces, and maybe that you may get a technical bounce for both from here for the shorter term. But if let's say valuation wise, if I'm talking fundamentally for both, as of now, I would avoid both. Let's take Adani Ports. See, despite this big correction that we've seen in the stock price, look at the valuations. Revenues approximately 25,000 crores 1 year forward, EBIT of 10,000 crores 1 year forward, but the market cap at 1,50,000 crores, in my view, doesn't justify the price at current levels. So I would wait for a big decline even from here if I get it to make a long-term investment. Same thing for GMR Airports. Loss making, yes, debt is coming down because there are certain positives that are coming up. Like for example, the Philippines airport where we completely sold. So they will generate some cash and bring down the debt. But I think valuation-wise, I would avoid both at current levels.
What would you recommend, say, in this infrastructure space at current levels with a long-term horizon? Shahina?
I would say L&T is the best bet. Also, I would go in for something like a HAL, Hindustan Aeronautics. I think both of them have good long-term potential, and they're doing pretty well even as of now.
Okay, got that. Let's also get another query in. We have Mohan Bupalla who writes to us from Delhi. He holds 1,600 shares of Nazara Technologies bought at 1,052. He's a short-term investor and wants to know whether he should hold or he should sell the stock. Let me come to you first on this, Ruchit. Like you can see, he's already seeing quite a loss over here. He says he's a short-term investor. Nazara, I think this month alone is down around 7%. For 6 months, it's down 35%. Do you think he can recoup these kinds of losses?
Not frankly. As of now, there are no positive structures that we can see on the charts. The stock is continuously forming this low top, low bottom structure. A few weeks ahead, even when some of the recently listed technology stocks showed a bounce back, even this stock didn't participate in that pullback move at that time too. So I think the price volume action is still not favorable for any up move. So my take would be my advice would be to take an exit on any kind of small bounce back towards 540, 560.
Okay, all right. So that's the view coming in on Nazara Technologies. The stock is significantly down on a year-to-date basis. or rather in the past 1 year, it's corrected quite significantly from its 52-week high, which was at over 900 odd rupees. We need to take a short break, but we'll answer more queries on the other side. Stay tuned. Welcome back. Well, just watch out for the financials because we have the bank Nifty, which is down around 2%, but the Nifty PSU bank index, which is underperforming. So that is down close to around 3%, 2.74% lost precisely on the Nifty PSU bank index. So there is definitely pressure coming in. Remember that it's already lost around 11% on a year-to-date basis, and it's underperformed the Nifty bank, which has lost around 5.9% on a year-to-date basis. So the PSU financials have been weaker than the Nifty bank. But we still have with us Shahina Mukadam as well as Ruchit Jain, who are joining in to answer all of your stock queries this afternoon. Let's get to another query then. We have Sethu, who writes to us from Chennai with an investment question. He says he wants to invest an amount of around 2 lakh in stocks. He asks if it would be a good idea to invest in Infosys as well as Ultratech Cement. Well, frontline stocks, what would you recommend, Ruchit, on a technical basis?
So technically, I think both the stocks are good if you are looking from at least 1 year or more perspective. IT stocks have primarily seen a decent correction in last 1.5 years. And Infosys have formed a good support base around that 1400, 1350 range. So I think the downside seems to be very limited. Maybe in the short term, they would see some underperformance considering the correction in the Nasdaq index, which we have seen of late. But from a long-term perspective, I think no downside would be very limited from here on. So Infosys is a good bet. Even Ultratech Cement can be bought at current levels or on any kind of declines towards 6800, 6900 range. So ideally, a high top, high bottom structure on the weekly charts have been seen in Ultratech Cements, where price up moves have been supported by good volumes. And generally, when we see up moves with good volumes, those stocks tend to do some good outperformance in short to medium term. So Ultratech is good, but a bit declines towards that 6800, 69 would be good levels to enter in case.
Okay, got it. Shahina, let me also get your view on this. What do you think of Infosys and Ultratech Cement as bets right now? Do you think these are good picks?
Yeah, I think both of them are portfolio stocks, and I agree with Richard's call, wherein Infosys can be picked up right away. Basically, at 24, 25 times 1 year forward, it's a decent bet to have in your portfolio, buying it now. And as we saw the third quarter numbers, I think the talk that IT demand is going to be subdued and going to be hit due to the global slowdown has not really shown up in the numbers. I think most of the IT stocks, despite third quarter being I would say, a quarter where you do not see, or you see a lot of expenses being written off. I think to that extent, all the companies have shown good numbers. So I think IT would be a good sector to invest in as of now. As far as Ultratech goes, I think it's better to buy it at dips, but it remains a good portfolio stock because of valuations. I think valuations compared to the rest of the cement stocks is on the upper side if you look at it on an EV per ton basis. So I think on declines, it will be better to pick up because we've seen a lot of competition come in, or at least announced that there will be a big amount of capacity that's coming up. So I think to an extent, the stock may be subdued for the shorter term.
Okay. All right, let's get to another query then. Nikhil Kumar writes to us from Mumbai. He holds 12,500 shares of Tata Teleservices, which he bought at around 137 rupees each. He's a short-term investor and wants to know whether he can hold these stocks for another 2 to 3 years. So, well, what would you recommend, Shahina, on this one?
I would recommend that he exits, books his losses. That's a big loss, but I think it's better to get out now. It's making losses and the net worth is totally eroded. There are moves where, the company is trying to revamp the business, reduce its debt, but I don't think for a short-term investor, he should continue holding.
Okay, you should cut your losses and get out of this one. Ruchit, do you agree with Shahina on this? You should get out of Tata Tele?
Yes, I think I have a similar view for Tata Tele. In spite of some of the pullback moves which we have seen in the recent past, we have not seen any sustained buying happening in the stock. Whenever up moves comes, those just last for 3 to 4 trading sessions, and then again the stock resumes its downtrend. So the trend is still negative. So ideally, one should take an exit and rather look for some better stocks, which would give better returns than Tata Tele in the next 1 or 2 years.
Okay, that is the call on Tata Tele. Both of our guests agreeing that maybe this is one that you should get out of. The other query that we have comes in from Upendra Sharma, who writes to us from Delhi. He holds 500 shares of Rail Vikas Nigam RVNL at 27. He wants to know whether he should hold or sell. Ruchit, he definitely got in at a good price here for RVNL, and we have seen the stock run up quite a bit. So he's sitting on a good profit, and this one is currently around 66. But the question is, how much more can it rally from here, and do you think it's one to hold on to?
I think yes, firstly his buying price is quite good, so he has a good margin of safety even if it consolidates for some for a few months going ahead. But the kind of breakout that we have seen in most of these railway stocks in the month of November 2022, this even RVNL has seen a breakout accompanied by very huge volumes. And if you look at the recent consolidation, the small corrections which have come in last 2 or 3 months along with the broader markets, the volumes are quite less in this price correction. So when the stock is going up, the volumes are good, prices are coming down or correcting a bit, then the volumes are very low. I think these are very good structures for mid to long term. So you can expect levels around 84 to 85 going ahead, which are targets as per the reciprocal retracements theory in technical analysis. So for a target of 84, 85, you should continue to hold on to his long positions.
Okay, all right. So that's the view coming in on RVNL. Well, for the markets, it's definitely weak at this point in time. We have the Bank Nifty, which is now showing a cutoff of over 800 odd points. And we just about have around 12 stocks in the green within the Nifty space. So we have a weak advance decline ratio on our hands as well. Overall, for the broader markets, we have around 960 odd stocks advancing and 1800 stocks which are declining at this point. So let's see, the last hour of trade would be important considering that we have important cues coming out from the US markets, which would be after we close. So we would be reacting on Monday's trading session. So it would be important to see what kind of positions people take ahead of that. That's all the time that we have on the show, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell up next.